Hello traders, and welcome back to another video. Now, first of all, again, I just want to say thank you to everyone that has subscribed, and if you haven't already, just make sure you do. And it does give you a chance to get involved in our giveaway that we're giving away. We're giving away £1,000, so 4 lucky winners can win £250 on New Year's Day. And if you want to know more information, obviously follow our Instagram or our free Telegram just to get a bit more information about that. But I also want to address, I know on some of the videos I turn the camera on, I show myself, and sometimes I don't. The truth is, I do get a little bit shy in front of the camera, and I do struggle to talk. And to be honest, I have a slight I'm doing it already. I have a slight stutter anyway, so that combo, it just doesn't work. But I will try and improve on this, and I'm trying to improve on my editing as well for you guys to make this experience as enjoyable as possible. Now, so the main objective of this video is to talk about losses. Now, the truth is, I take losses, right? And that's the big secret. The thing is, taking losses is just going to happen, and for some reason in the Forex community, it seems to be such a big thing to hide your losses, and I don't understand why. Because in fact, I'll even show you. For example, I actually did a post in our Discord group for our students. Now, every trade that I take, you can actually read this, you can pause and read this if it helps, but every trade I take, if it wins or loses, I either post it in the student group, or I post it on Instagram, or I post it on the free Telegram group, which you guys can all see, okay? Because I don't really, there's no reason for me to hide my losses, you know. I'm not trying to impress you. I'm not really trying to impress you, to be honest. I'm just hoping that the results would show you what you can potentially be doing, right? But this is a post I did when I think a few people going through a hard time with their trading, and obviously using smart money concepts. For those of you who have experienced it, would know that you do have a lot of losses using this strategy, purely because of the size of the stop losses. You can be taken out by spread, for example, you know, many factors, or you could just have the wrong OB, right? And this is a week where I actually took I took a bit more risk in this week, purely because it was a bit more of a boring week for me, and I just had a lot of time on my hand to actually sit on the charts. I don't normally sit in the charts for that long, but for this week I just did. But yeah, so if I show you, like, I just took loss after loss after loss this week.
Another one, another one, another one,
and only had that one win.
yeah, boy.
This is the trade that this is the trade that I did a breakdown of previously. It's the GBP USD trade, the long, right? And yeah, but this one winning trade, and then obviously I had a string of losses, and you can see my losses are very consistent, and it's just showing you the power of risk to reward. One thing that actually came up today is the fact that we never really show our accounts. But the thing is, to be honest, I don't really want to show you my account. Whether you want to believe that this is my real account or not, I don't necessarily care. But I don't necessarily care, to be honest, but I show everything anyway in this sense. But what I'm trying to show you is that, you know, I take losses too. So if you're taking losses, especially if you're using the free strategy, it's going to happen, right? But I'm going to show you what you can do to actually minimize these losses. And it'll probably give you a little bit more insight as to what we do at Vertex when we're trading. Now, for example, so I've got GBP USD, and I actually just picked this up like a few minutes before I started recording. So what we can see is, if I was to let's just zoom in on a certain area. Okay, so what can we see? So if we are looking at what price is doing here, so price obviously is gone up bullish, and it's created a high, and then it's created a low, broke structure. And what we're thinking now, this is the 15-minute time frame. Don't focus on the time frame for now. I just want to focus on the concept because we won't be really using it on this time frame alone, because you obviously want that higher time frame support. But this is the clearest example I found to show you guys. But so imagine this is the 4-hour time frame. So let's just I can't even cross that out, but imagine we're on the 4-hour time frame, right? Can I put that over? Yeah. So imagine we're on the 4-hour time frame, right? And if you're looking at this from this perspective, what you'd be thinking is that you've got an order block here, right? But what's happened? It's come down and it's taken you out because you would have placed an order. Now this is purely based on the free strategy. It's not our refined method with our entry criteria, right? But using the free strategy, you would have ended the trade here at the 50% or at the open, or even refined it even further, and you would have been taken out, right? And then you'd probably be a little bit annoyed, to be honest. Losses aren't the best, but the key is, say for example, I don't want you to be able to be in this position where you're doing this. Oh wait, I didn't go far back enough. Let's go back one more. So okay, this is current price, right? And now what we could say is this is the order block here, and we're going to do the 50% of that, and we're going to place our long position here, and say the TP's up there. That's a fairly big move, to be fair, on the 15-minute. 116 pips, and your stop loss would be just below this wick, right? So it gives you 5 pips stop loss. Okay, now let's just let price play out, and what happens, you hit stop loss. Now what tends to happen is people get very emotional with these losses.
Oh my god! Even oh my god!
Right, and to be honest, even I used to. But the point is, you need to have trust in your edge. Now, if you have an edge, and if you don't know what an edge is basically if you have a win rate above 50% in the market, you have a edge over the market, right? So in the long term, you are winning despite these losses. And with that in mind, if you think about it, with our losses being 1R, all right? And if you don't know what R is our risk. So if one of our losses is 1R, so say this is, oh god, I did not mean to do that, apologies. Say this loss is minus 1R, I didn't do the minus. Okay, if you're too busy getting emotional over this, you're going to miss out what's actually happened, what's happening at the moment, right? What you need to think about in using this strategy is, and this is probably the best way to choose your order blocks, is trying to find the extremes. Okay, and what I mean by that is, bear in mind when you get an impulsive nature, right? It will leave loads of little OBs about. Okay, and this is a very good example because we've got a clear OB here, and this is the first one that springs to mind for me. Okay, and then if we keep going along. So we created this high, and then we didn't break this structure until this move here. So this candle here broke structure, and this originated from here. And what can we see? That is a clear OB. Bloody hell! I did not mean to draw that there. Let me put this here and here, and there we go. So, and we've got an OB here. Okay. Now for me, that is the only extreme that, those are the two extremes that are pointing in my, catching my eyes basically. And the reason why we're not looking at any, so for example, this is the low, that's the high that's been created. The reason why we're not looking at anything in this space here, right, is because that's all noise. Okay, because it didn't break, none of these structures broke broke this high or broke this low, so they're insignificant. Okay, so although we're breaking structure, right, they're fake structures. Essentially, they're not major structures for us to trade off. And again, ignore the fact that this is a 15-minute time frame. Just imagine that this is a different time frame. I just couldn't find a clear example for you guys. To be fair, I think if I spent a bit more time, I probably could have found a clearer one, but I saw this and I thought, okay, I could work off this. But what can we see here? So you have two positions that you can potentially have. So when price is all the way up here, and although we broke structure, you still have to think price needs to come back and mitigate it. And if you don't understand what that means, watch the webinar again, which I'll tag to this video, just to understand the whole process of order blocks, because price needs to come back and mitigate their orders, right? So that's why we're looking at the extreme levels, because if you think about it from a Fibonacci point of view, we need a retracement of about, I think, what, 60%, 68%, 76%, something like that, right? This retracement, so for example, this is create the high, right? That is not going to be this retracement to here, right? From this overall move is not going to be 60%. That's less than 50% of a retracement. So you know that this is not going to be the point of interest. But obviously, if you want to take the risk, and it does depend on your risk appetite, if you want to take the risk in this position, you can. Okay, that's completely up to you. And for those who take that risk up here, you obviously have a good understanding of your edge, because you know that this is a -1R risk, this is a 1R risk, right? But you know that when you do win, you're going to hit 10R plus, so that 1R loss does not mean anything. So although our strike rate can be less, the power of risk to reward will always keep us ahead. And this is what I was trying to show here in this, because look how many trades I lost. 1, 2, 3, 4, 5, 6, 7, 8. I want to count this as a loss. This is a break-even trade, but I just moved my stop loss a little bit above just to cover the charges as well. So I've lost count. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 losses and 1 win. And then I ended that week at 10,000. So if you're thinking about it that way, I took loads of losses. Bear in mind, my risk appetite this week was very high, so I took that decision. I don't normally trade as aggressively as I've just shown you on that week, but that is what I was trying to show you. So in this case, you just have to have trust in the edge, okay? And I hope that me saying this will give you a lot more comfort, to be fair. But when you get a situation like this where you've got two clear order blocks, now this is an order block here, but for me it's more of a continuation, and it didn't really break this structure. This structure was broken by this order block here, and it's a very clean one, right? That's not been mitigated. And in, for example, say if you look at these order blocks, they're not clean. These are all been touched by another wick, right? They're not clean order blocks, whereas this one has not been touched. There's a gap there, and if you want to know what that gap is, I suggest doing your research to understand what that is, because I'm not going to explain it in this video. But let me get rid of this, it's in the way. Okay, so what you can do in this case, sorry, is you can actually place your order. For example, let's just use, for example, the 50% of this. You're going to place your long at the 50%. So just say roughly somewhere about here, and your stop loss is going to be, they just put it below the low. So let's just do it for 5 pips. I didn't back test this one before I did the video, but let's just say it's there, just below, and then your TP is just going to be up here. So this is a 41R trade, right? And if this loses, you know your next point of interest is here. Now if price comes and breaks structure, so if price comes and break structure here, we know that now there's a market structure shift and we're potentially going bearish, okay? But again, you have to follow the multi-time frame analysis as shown in the previous videos to understand what is actually going on with price, okay? But if this trade loses, we know that we're going to use this order block here. This is a very clean one, and it did break structure, so price has a good reason to come back here. But again, for any of you Wyckoff traders, or Wyckoff traders, sorry, I didn't pronounce that right, we'll probably see an accumulation schematic here, and probably see this at the LPS or whatever. Again, it's up to you if you want to use that or not, but it fits our entry criteria for me. But actually, I'll speak about it later. But what we can see, if I let this trade play out, I think it reacts here, I believe. Yeah, so it reacts here and then off it goes. I don't know if it hits TP. I know it goes bullish, but I'm going to let this play out and let it close the trade. Okay, so we've hit TP, and that was 41. That was 41R in the space of. So it triggered here. and it hit our TP here. So it took well, not just over a day. It took a day and 11 hours to hit TP, but for us a 41R. So in this situation, okay, if you're taking a 1R loss here and then hit a 41R trade here, okay, you're left with 40R, right? So why should you be panicking and worrying about this -1R that you just took? And that is what I'm trying to say, is the power of risk to reward is so strong using this strategy. These losses don't really mean a lot, okay? And everyone takes them. I take them. My students take them. In fact, I'll put some screenshots of our students taking losses, because I want our students to take, well, not to take these losses, but I want our students to take these losses and own them, because I don't want them to fall into the habit of not showing them, because these losses are what you learn from. Because say for example you take this first trade, right? What you can do is you can go back, and even if you don't, say if you decide to not trade for the day because that's hit your loss limit, and so on, you can go back and think, okay, so what's actually happened here? Why is price not appreciated this OB? And then you could look out and work out, oh, price has gone and reacted to a different OB, and it makes sense why it's reacted from there, right? So even if you lose using this strategy, you can work out why you've lost, and that's probably one of the biggest eye-openers for me personally when I was using this strategy. And the difference between obviously the free strategy and our actual entry criteria, we probably would not have found an entry there, and if we have, we most likely would have been break even from this small impulse, okay? Because our entry, we require, essentially what we need is we make out a point of interest, and we need to wait for our entry criteria to be met once price is in there. What this does is increases the win rate massively. Sorry, that doesn't look right on the screen. It increases the win rate massively, and it not only does it do that, it also builds the confidence behind your trade, because you've got the added confluence, okay? And that's the main difference. But it's not saying that the free strategy isn't good, because as you can see, it works, and it does work, and if you backtest it enough, you will see it that it works. But yeah, as you can see, this is a solid trade from one move, right? And that could be you done for the month even, because 40, if you're using 1%, 40% is crazy for the month, right? That's regardless of what capital you're using. If you focus on the percentage gain, that's crazy. That's mad. And actually, speaking about the percentages that we make and our students make, I don't want some of you guys to. I know some of our traders are FTMO traders, but you have to bear in mind, everyone treats FTMO very differently. And for me, my personal account is my main account anyway. I use a different risk. Like for example, my low risk account. Got there in the end. My low risk account, I only use 0.25%. On IG, my leverage is 1 to 30, so I use what I can. And then on IC markets, it's my high risk account where I use 2% risk per trade, right? And on my FTMO, I use 0.5%. But not all my trades are taken on there. I only take my high probability ones and not my risk entry ones on FTMO. So whatever you see the results from FTMO, and if you're trying to link it to us, it's just not going to work, because everyone treats it very differently. So yeah, so that was just a comment that was raised. But for now, I hope this video has helped and helped you understand that if you do take losses, it's okay. All right, don't worry about it, because our edge is so strong that you will come out in the green regardless. Okay. And I think actually saying that, another comment came up is, if you're hitting these percentages and you're compounding them, you should be hitting over 1 million from a small account. And in theory, yes, but you have to take into account that you have to take into account the trade charges. You have to take account into whether you actually compound it or not. You have to take into account the taxes that you pay. Your take home is very different. Right, and So yeah, so you have to think about everything in that sense if you're going to judge based on that. But again, I hope this video has been helpful. I do have a few breakdowns to do. Some of you have sent me some amazing stuff, to be fair, for me to actually do breakdowns of. But yeah, I hope this video was useful, and I hope you take care and stay safe. And again, make sure you like and subscribe this video, and so you have a chance to actually join into our giveaway. But for now, I will leave you be, and I hope you take care.